Good afternoon. Today's session is very important. I will be teaching you some things for you to know how to execute your trades. There are important things when you are confused that you have to go back to really understand what the structure is trying to print or what the market is trying to print so that you'll be on the right side of the trade. I'm starting with US dollar index. Note that market does not do you any favors. So you must always be thinking in the alternative. What if market is trying to go up, or what if market is trying to come down? What are the things that will confirm to me, that will tell me this is where the market is going? So you have to knock off, based on the knowledge that you have, that this is what the market is trying to print. And when you are confused and is in the middle and it's 50-50, you must be able to mark levels of transition where you tell yourself, if price should do this, this is what is going to happen. Now, we can see on the weekly time frame that market has printed this and has ended this wave, and now we are coming down. So this is what we've done so far, and we believe that dollar was losing it, and this is just a corrective wave to the upside, and we are almost getting to a point where dollar is going to begin to fall. That is what we are seeing, the signals that we are picking. We see this move as a five-way structure to the downside. This is the first part of correction A, and this is A, B, C of B, and this is a C wave. And this C wave is getting to its end, and we're going to look at it. Now, let me try and enlarge this. Let's look at the daily time frame. See, it's the appearance of the doji. Apparently, it's like we've been correcting here. So when you are seeing corrections like these, more or less on the sideways correction. So this is consolidation, and we are almost getting to the end of this wave. So maybe this is going to end, probably it's going to end in a doji, bullish doji. We don't know. Let's look at the daily time frame, what we are getting on the daily time frame. The daily time frame, you can see, is pretty much corrective wave. And you're being able to understand what market is trying to print here is what is going to help you to navigate where price is going to go. Now, when we talk of corrective wave format, is what comes after an impulse. If you've had an impulsive wave in a particular time frame, what you see next is there's going to be correction. And correction can happen anywhere, maybe immediately after the first wave and in the middle of the third wave. And when it's occurring majorly at the end of the third wave, we are saying that, okay, this looks like the major fall, and we want to do the last wave of an impulse to really come down. Now, what we do know in any corrective pattern is that all of the time, the corrective pattern is in three waves. It's in three waves. But the last wave, which is C wave, is always impulsive. So when you are looking for the direction of correction and what is happening, you must be able to identify C wave to mark the end of a particular wave of correction. So you have to identify, at times A could be impulsive when you're talking of a zigzag. If it's a zigzag, A can be impulsive, but most of the time, the C wave marks the end of a particular correction, and it usually is very impulsive and motive. It's a motive impulsive wave that you should see. And that would always signify the end of a particular correction. Now, when you are having a flat, you know all the field relationship between what a running flat is, what a regular flat is, what an extended flat is. So I'm not going to go into that. If you don't know, go and read about corrections, of Elliott waves. So that will tell you what you expect in a regular flat, what you expect in a running flat and extended flat. When you are talking of flats, the first wave is 3 waves, which is A wave is 3 waves, B wave is 3 waves, but the last wave is 5 waves, which is C wave is, like I said, impulsive and motive. Now, what makes them different now is what is the field retracement or extension of B wave to A in those flats. Then when you are talking of a zigzag tells you the first wave is impulsive, which is A is 5 waves impulsive, and the last wave also is 5 waves impulsive. You must be able to count the 5 waves of a zigzag. Now, one thing again you must know in correction is what we call a double 3. What we call a double 3. And what we call a double 3 is what we refer to as a WXY. Correction. A double 3 is what we refer to as a WXY correction. So in your W corrections, you have 3 sets of waves, A, B, C, to give you the W. Then immediately after your W, you're going to have your X wave. But one thing you must know about X wave is that X never retraces the whole of W wave. X never retraces the whole of W wave. As a matter of fact, the retracement that you should expect X to do on W wave is 61.8 or 61.8, 76, max 86.5. That's the max that you should expect of X to do. And these are things that tells us we are changing guide, or this is where the trade is going. When you are having a break of those structure of correction. Now, so X does not retraces more than 61.8, 61.8, 76, 85 at max. It won't get to 90. And what tells you, again, that something is zigzag, it's if you're able to count the first wave as, the 5 wave and the last wave as 5 waves, tells you it's a zigzag. So, like I said, in a double correction, you have a W, you have an X, and you also have a Y. In a Y wave, the Y also will be divided into 3, just like W, it is divided into 3 waves, 1, 2, 3, A, B, C, to give you the W, and that is 3 swing. The X gives you just 1 wave. In some occasions we have seen X being like a flat or anything, so it can be anything, but usually we regard X as a single wave, and so that will be the 4th wave, and your Y will be 3 waves. That will be 7 swing. So that is what we know. But when they decide to make it a 333, means that you now have a WX, Y, another X, then Z. And that is 11 swing. That is 11 swing. Most of the time it ends there. So you have W, you have X, then you have Y, then the X after Y also does not retraces more than 61.8, 76 or 85. Then you now have a Y. And usually when you look at your Y, when you look at your Z to W, usually the extension is between 61.8 or 100, not more than 123. Now, when you are having an ABC correction, you must know that that's a simple three-wave correction. A can be any form of wave, B can be any form of wave, but the last one, which is C, usually can be 100 extension, can be 123, but it does not go beyond 161.8. So 161.8 extension of ABC is the last that you should expect in a correction. So we must know all of these things in trying to interpret what a wave is trying to do. So let me go right inside of a let's see 4 hours first. Now, this is 4-hour time frame. This is 4-hour time frame. Now, we see this as the fourth wave and the last wave. So this is the first correction. This is the first correction, where we see this as A, B, and a C. Or you can call this one A, W, X, Y to give us a big W. A, B, C, or A, W, X, Y to give us a big W count on that time frame. But one thing you will see is that this X wave here, or the B wave here, is retracement, is what you should look at. Is retracement is what you should look at. It's retracement. And looking at this may have given us like a 5-wave structure here, and this looks like a zigzag here. It looks like a zigzag correction here. So this W wave looks like a zigzag correction. That is one thing it has given us here. A zigzag correction. And this is, the first part is 5 waves. Then we have this in the middle. Then we now begin to see another move to the downside here, as a 5-wave structure to finish here. So this is a complete correction. So a W, and this is seen as an X. Now, in this as an X, that is where it's also, very complex as an X, because an X here, you have to look at, okay, the wave is not making a higher high, because it's not making a higher high, it's still part of this move, the old move here. So this entirely might not just be the end of the wave. So it might just be A, B, C of the middle wave. So that's what it is like now. So this is W, and the whole of X is like A, B, C of the middle wave. And this is the last impulsive wave to the downside, which is C, or that we call a Y in this case. Then we are saying this. We are saying this. Let's go inside of a 1 hour. There is a whole lot to show us on the US dollar index, because what is giving us on the US dollar index is quite different from what the DXY is printing. So just like I said, this is the end of with 35 here, 4 and 35. So this is a bigger 4. Are we done with this bigger 4? Are we done with bigger 4? The clue to always finishing a particular correction, because X is going to be on the opposite side, or the direction of the move. When you are correcting low, and it's still going down, the first wave, which is this one, and it gives you an X, it means that when you are still going low, the next correction will break the low. That tells you are still likely going to go low. But when it's like you've done like what you call your WXY, like this one is going like a running flat here, and you are now having wave breaking your X here, it tells you that the correction had finished to the downside. What they are trying to do now, they are going back up to finish up the wave to the upside. So this, we are not in correction anymore. So I won't see that this is coming right now. This particular one is coming to break this bottom. No, I don't see that. I don't see that. Let's go to DXY so that we don't waste much time on this. Let's go to DXY because the DXY format is different. Now on DXY, we can see the WXY of a W here, and we have this part of the B wave in the middle, because we can still call this one ABC. Really, we can call this one an ABC. So where we have the A here, and we have this in the middle as A part, B part, and C part to end this correction in the middle. Because you must always look for middle correction in any time frame. And it could be like this format. And when it's like this format, you don't even know what they are. So sorry for that break in transmission. I'm just trying to show us something, that when we have this first part of correction to the downside, and the B or the X can always be like this. Always expect your B wave like this, and that when you have this may even have gone up to break this top, and the new top will mark the end and not this one. So immediately you mark the end and the price is breaking down this one. So this one marks the beginning of the way to the downside. And this is like a 1 and a 2 and a 3, a 4 and a 5 to end this. So in this case, we had seen a low here. We had seen a low here. So this is the first low, the X or B, and the second low. Now, if we are still correcting down and we are going down, what you should expect is that you shouldn't expect a break of B, because this is X in the primary, or a B. And more so when you are coming to this point to break this one, because of the first wave here, this is B in the primary, and this is B in the secondary, or you can say X in the primary, X in the secondary. So we are yet to break X in the primary. We are broken an X in the secondary, or a B wave. That tells you this thing is going up. We are out of correction. Because if I bring this drawing, if I bring out this drawing, just like I said, a WXY to give us this, a WXY to give us an A, and this is a B wave, and we have a C here. Now we are seeing a break out of here. So sooner or later, we are going to break the primary here. And those are signs that, see, we are going up again. And this going up means that probably we are going to relinquish and finish with 5. Where the cash is to you now is this thing here. Is it wave 1? Are we doing a wave 2 to do a wave 3? What I'm calling is that this is a wave 1 and we're going to do a wave 2 to do a wave 3. Where it's most confusing to you is probably you had not seen this as a 5 wave structure to the upside, and we're having a deeper correction of a 2. Go and check gold. What gold did going up. When it's highly impulsive, you barely cannot count the internal wave. It might be difficult for you to count the internal wave, except you go down to look at, okay, where is the primary 2 in this one? Because it's highly impulsive, it might be difficult for you to see a primary 2, but a primary 2 is somewhere there. Now, we are seeing this. Now, 2 ways of dealing with this is this. Is it that this is a W or A, B, C, and we are done with the correction, and we're not going up to break the top again to finish with 5? Or is it that what we are seeing here as a double 2 is going to become a double 3? Is it not going to become a double 3? Where this one has become probably A, W, X, Y. So we've had an X here and a Y here. Is this going to be an X to now have a Z to the downside? So which means that you are calling more correction to the downside, and that will be an X, a Z. What nullifies that is the fact that these had broken this structure. So this, we waited for it. It has broken this structure to the upside, and we know that what this one can only be is this is coming down to correct this. Now, in terms of correcting this as a wave 2, at what point would we say that this wave coming down is not a correction of this wave 1 that we term wave 1? As soon as you break 78 or 85 points, 6 retracement to the downside, then you should know that you are actually going to break down. So it might just be the end of move here and we are coming down. So, but we are still calling for more upside. So in this, what we are telling ourselves is that from here, a retracement to the upside so this is 78, this is 85. We don't expect price to break this. Price may not get here, but the depth of where this price is going to get to will be determined by this. As we are seeing this correction here of a 4 as an WXY or ABC, we are seeing this correction also unfolding to give us a 2. At times, we don't even know if this one is a correction or not. And this is where the clue is. Let's go inside of a 5 minutes time frame to see if, is it a motive wave? Are we going to start a new wave of 1, 2, 3 to break down here, to go down? I don't think so. Now, this had finished for me as a wave 1, the way it went. And probably the primary 2 is somewhere here. Let me show you. Primary 2 is somewhere here at this point here, where you saw this red, not here. The primary 2 is never here. So the primary 2, okay, or here. The primary 2 is not here. This is the primary 2 here at this point here. This is primary 2, not this one. So this will be a place for price to say, okay, that will lead you. Now, going inside of here, we had finished this one as a wave 1. It's like we are coming down. We have broken this structure now. This is the structure that we have broken. Breaking this structure to come down here means that we are actually correcting, and we are going to go down the more before we go up. That is what I can see. Now, this move in itself is the structure of A, and this is a structure of B. Like I said, you must be able to identify a C. A C in any correction is a motive impulsive wave. And that is what we've gotten here, an impulsive way to the downside. That is what we've gotten here, an impulsive way to the downside. And this is what we have. And if you count the internal structure, is a 5-way structure. Now, looking at here and here, between these and these had gone like a 5-way structure to the downside, pretty much like a zigzag. And we have the B in between here as A, B, C. And the C also here is impulsive. You must always understand that. The C here also is impulsive. This is A, B, and impulsive. And if you also look at this one, the last C also here, after this B, is also impulsive. So impulsive of B, impulsive of the last C, to give us an A. And if it's going to be a complex WXY, we'll see with time. But A, B, C to give us an A in the green. That is how to label it. Now, we are going more further. Let me go inside of a 5 minutes time frame for you to see what I want to do here. It's a hell today. The network is so bad. So this is 5 minutes time frame. And I'm trying to show us this is an A here, and we have an ABC of a B. Now, this is an example of what will give you, because if you look at the retracement of A, this actually went like a 5-way structure, then a break of structure at this point to come down. So if we look at this one, the retracement to the downside, it's like 85. So giving us a zigzag pattern. But in this zigzag pattern, you know, this is A, this is B, and ABC of a B. The extension here, what is it? So we've got to look at the extension. What is it going to give us here? From here down to here. So this is about 61.8, 161.8. So we must understand at times, even if you are going beyond 123, 127, or 100, it doesn't mean that price may not do. So because you expect the last wave to be C, to be a C and a 5-way structure, what we guide you is as you are going on the journey of trying to count, you will know if it's going to push beyond 123, 127 and get to 161.8. That's just our body must not break 161.8. So this is what we are seeing here. So an ABC of a B and A, then we have another 5-way to the downside. Now looking at this 5 waves to the downside in terms of this as an A, B, and a C to finish A in the green, what extension again do we have? Because it might be, let's see, from here down to A here in the green line there, back to here. This is exactly 1, 2, 3. So the reaction occurred at 1, 2, 3 that you expect for it to happen, and this is like a zigzag, 1, 2, 3 from here, and of course the reaction, of course, here we had measured this one retracement, but retracement also here of this A and B retracement is to where we have B is 76. So we must understand as structure is developing how to count and what to make out of structure. So now we have finished these as an ABC of the first move of A in the green. So we have finished this as an A, B, C of the first move of A in the green. This one that is going up is now seen as an X or a B. To be an X or a B tells you these are giving us something like a zigzag. Because it gave us a zigzag, this may not push beyond 161.8 or 78 before it turns down. Because this is like a zigzag. This is not a flat. This is like a zigzag. B wave, I told you, this one is a zigzag to the downside. So because it's a zigzag, the X wave does not even go beyond 85. It won't even give you a 90. So don't expect a regular flat or extended flat or whatever here at all. So the big wave going up or an X wave, if it turns out to be, is not going to go beyond here. So it's not going to go beyond, this is 78 and this is 85. And you see, the one clue of a thing that you should always know is that if price is actually correcting, the price will never break a primary B because it will be making a lower low. The price, these are set a limit for price not to break for now. Not until the correction is done to the downside that the price is coming to break this one to the upside on the DXY. So these are the things we must know in a corrective format. And of course, would you say that this move, ABC as a single flat had finished the correction? Would you say that this one is going up to break the top again as we are continuing? Do you think that this one is enough as a 2? Let me go back to the 15 minutes time frame. In terms of what we expect this to be and to give us a correction, at least it has to give us a 50 to the downside. So what has it done? These are things we pick to tell us that, oh, the price is still going to make it down because it's not enough correction. So this is just at 40, 38. It's not enough. It's not enough. So that is, so we had established that the correction is not deep enough and it won't stop here at 38. At least it will get to 56.1.8 to give us a 2. And this B correction, it's very important for us to know if we get a price action to sell a C, and from a C we can buy to the upside. And buying to the upside is going to be a very impulsive motive wave. So we are expecting that the C, once we are coming down to do a C is going to give also an impulsive way to the downside. And now it's another thing entirely if C is going to be more complex to give us an A, B of a C, and a C of a C. We'll wait to see all of that. But what will be most important is the retracement of this A in the green to B in the green to C in the green will tell us where we are going. The thing is that we may get to 100 extension or have a truncation between A, B, we must be ready, but counting the internal wave will also always give us a clue if it's going to be truncated so that we are not shortchanged. Now, let's see the inside of here. What we have gathered here is that this is A and this is a B wave going up. One thing we have gathered is that we don't see this wave breaking this for now. So what we are saying is the B wave is going to probably go up and go up the more and begin to break down as a C wave to the downside. So if this is a B wave, this may just be a part of a B wave. This may just be a part of a B wave. And we want to see a B part of a B wave. Before we do a C part of a B wave. And doing a C part of a B wave, of course, what we expect a 5-wave structure to the upside. Then immediately after that, we're going to come down sharp to do a C wave. And with that C wave, we should be getting to, we should be expecting, for now, in terms of retracement of what we've seen here, of this particular wave here. Price at done 61.8. Price at done 61.8. So we may be working very close to 78 or 85 here or anything at all, depending on whatever the price is trying to do here before we have a turn to the downside. This may just be a B here. This may just be a B here. If I go inside here, because A wave is done, A wave is done. And A wave here may have probably given us a B, I don't know. So like looking at this one, the A wave, under this A wave, we can see A, B, and a C to finish an A wave. Because this one came down as a C, so we have an A, B, and a C to finish an A wave here. So that's a triad on 5 minutes time frame. So here, doing a B wave here, so we are seeing like a 3 wave, 1, 2, 3. So this might be a 3 wave, this might be an X. So this X, there's going to be a B wave here. Then we are saying this might just be a part of it. 1, 2, 3, another 3 wave. This might just be a 5-wave structure to finish this B, to finish this to the upside, and maybe we may be coming down. So this may be going up to finish this. It now depends on what we want to see now. So this may just be an A wave, and this might just be a B part, first part of it, and the B of B here before we had a C. So we are going to wait and see what structure is making up here. This looks like a 5 wave, an X here. Let's go inside of 1 minute time frame. All these things are complex. I'm just trying to break it down for you to see the correction and all of that. So this is the correction we are talking about now. This is A, B, and a C. So in this A, B, and a C, so you can see that this is A here on 1 minute time frame, A, B, C of a B on a 1 minute time frame, and this is 5 waves to the downside. Now, in this 5 waves to the downside, they also did this C wave as an A, B, and the 5 waves to the downside. So for us, the all of these an A, B, and a C, a 5-wave structure, a 3-wave structure, another 3-wave, and A, B, C to the downside to finish this as a part of a B. Now, we are yet to see what is cooking up here. So because they might make this as an X here. And if you look at this as an X, of what retracement is it that to the upside as an X? Is about 85 that is expected of an X. Is about 85 that is expected of an X. So this may just be a WX, and this going to be a Y. So far we don't break this top. So far we don't break this top. On a 1 minute time frame, so far we don't break this top. So far we don't break this top. This one becomes our X, WX, and this may just be a Y. In the this one is now the first part A. Then we are seeing an A, B, C again before we have probably a C to the downside. But I won't recommend that you continue to do this breakdown here. It will get messed up. But what will tell us that we are done correcting to the upside to finish, to now do a C in the green is number one, we are not breaking this top of primary B. And that we are going to break this place here, which is more than 161.8 extension. 161.8 extension. So 161.8 extension. So if you do this, an extension, this is 161.8 here. So a break to the downside here tells you that we are done going up. We want to see, is it possible for us to still go up? We don't know yet, because this may just be an A here, a B here, or on an X here, A, B, C. Then we might have some stupid correction here before probably we begin to go down. We may not go beyond here. We may even break it if we still decide to go up, but it's more than enough a 61.8 correction of the entire run here. Is more than enough. So we may be going down to do a C. So we may be going down to do a C. What I'm trying to say is that the price is not going to break up now. It's still going to be a sell. It's going to be a sell to finish with C. So once we break this level, we can now begin to look for our extension of where C is going to be, and probably we can get our buy order to go up. So we are still coming down, this area. So once we break, we're going to break here for a deeper correction. Price is not done here. So we're going to break here to see. This also, another thing you must look at here is that this may not have even finished itself, is correction. Because I'm calling this one an A and a B, and this might just be a fourth wave, and we might just have one more wave to the upside and to turn down. So in that case, if that is what it's going to be, let's look at 5 minutes time frame. This is like a 2 here. This is like a 2 here. It looks though as if this is a 4 and a 5. That's the way it looks. It looks though this is a 4 and a 5. And this is a major, this might just be a major 4, which is A, B, C, a major 4. This might just be going up as a major 5 to finish. And if that is the case, we might be expecting reaction around this area to turn down. You might be expecting reaction around this area to turn down. So if they're going to now do another 1, 2, 3, 4, 5 to the upside to finish, we might be turning down around that area, because this may just be an X. Then we're now doing probably a 1, 2, 3, 4, 5 to the upside to come here. So if that's the case, we might just be saying that, okay, we may have just retraced the whole of that to about 78 that is expected. So if anybody wants to pick a sell, maybe around 78 will be ideal for you to pick a sell to the downside, to sell this to the downside. And once we have a reaction and we now begin to make lower low, then we can now project an 100% extension to the downside. That is what we can expect. So this may just be like a 5-way structure of an X or a B here after this A, B, C of an A. So we just go down. Anything is possible. But that is the direction of what we expect for now. We may still break up, but once we begin to break down, that means we are coming down. Once we begin to break here, maybe we are coming down. So we may still be going up to do more corrections to this, between this zone and this zone, but we're not going to break here. So once we break here, it's the end of correction to the downside, but it's very shallow. Now, with that said, let's look at euro dollar. I think I've helped us. Euro dollar. With that said, euro dollar. Let me go to 1 hour time frame. On euro dollar. Now, going on a 1 hour time frame on euro dollar, we had been in this correction. We had been in this correction. After this 4th wave of 3, we had the 5th wave, and we've been going up. Just like I told you, we had an WX here and a Y. So one thing you will see here also, look at this X, which is the primary X. This X will not break it. It's a limit because it has to form a, so price will give you a clue. But because we don't understand, price will give you a clue that I've given a primary X here, So this X, when it comes down, it won't break it. It may cap it, but it won't break it. And this one came down like this as an X. After this, we did a complex correction of A, B. This one finished itself here. Then we came down like an a B, and we now began to go up to do a 1, 2, 3, 4, 5 to finish this one here. Now we made higher high, higher low, from this low higher, more higher, and higher low here. Now this one is higher high, from this high to this high. Just like I said, are we done with the correction upside? Are we going to get a W, X, Y, and X, Z? From what I can see here, the answer looks no. The answer looks no. We are now beginning to see that the move is breaking down again. We have broken this B here. We have broken this B here. We are yet to break this X. With a break of this X tells you we are going more down. But one thing we have done, we have broken this B. It's more apparent on what? On DXY and US dollar index. We have broken this B, and we can see that the price is visiting the lower edge of the channel here. So which means that we are done with this channel. And this, for me, I won't say this is an X. We can't break this low, even though it has not overrun this one. For us to go up, I won't say that. I think the DXY and US dollar index has put things in clearer perspective. So the only thing we can see here is that we are done with this move. We are out of the channel. We are done with this move now. This to us is a 1. So not until we break above here, I won't say that we are going up to do a Z to make it an 11 swing correction. So it's not likely. So we may be seeing a 1 and a 2, just like I did explain. So of course, can we break this? Yes, we can break these, or we can cap this. We can actually cap this, which is the end of A here or Y here. We can cap it. We can cap it, but what will determine where we are going next is what we are seeing here. So let me go inside of a 15 minutes time frame. It's the same thing. You just have to, invert your DXY. So just like I said, 1, an A and a B, and this also is what is 127 extension. That's a zigzag here. And a zigzag here, this tells you if we have had a B here, it means that the price coming down will not take this low. Just take it from me. It can kiss that low, but it's not going to break below here to turn up to the upside. So if you are doing a sell, you have to be very careful to do your sell to get out, because it's going to be a buy. It's going to be a buy to give us a more complex structure, because this is not enough to correct the entire run to the downside. So what have we done here? We barely just went past 40. We've not even touched 0.5. So we still have more upside, but we're going to come down for now, then go up. Just like I explained on, and where you don't want to break is this area. This is 80, let me see, this is 85.6, and this is 90, if I'm correct. Yes, 78.6, 85.4. This is 90. Price should not even break here. Price has no business here, except if they want to manipulate. Price has no business here. This is the last price. And where you should expect price is actually at this point. If price is going to get there, then you must be looking for a fall. But again, when price decides to break up again, after finishing a B, begin to count your 5 waves. Nowhere is going to trust with 5. Look for yourself, and it's going to be a rocket to the downside. But if they decide to break up, fine. We always want to pick at where we know it's the turn is going to be. So if they're going to break above, they're going to lose small. So for now, if you can sell to this side, buy and exit your buy around this area. Once you do a C, count your C leg, you must get your C leg, and that's a clue. Because it's a C leg, 5-wave structure, get out of after the 3rd wave, wait for the beginning of the next wave to the downside by counting the 4th and the 5th of it and come down. And again, depending on what is going to be, we should be expecting probably, if this is an A now, the B that is coming down will form the B for us to get a C. That's the way it's going to be. So we'll know where we're going to be. We're going to break this structure. Breaking this structure does not mean that we are going to break the top. No, just breaking this structure. This is corrective wave. It's highly corrective. And that's what we are seeing here. It's highly corrective. So going inside of the 5 minutes here also, just like we saw, this is like the 5-wave structure, and looks like an A, B, C. Of an A, we are within a wave B of this round, and we may just be doing an extension to the downside of 161.8 from here. And again, the clue will be counting. Once we break down, begin to count 5 waves, because it's going to give you 5 waves to C of B, and it's going to now go up as an impulsive wave, to do a C to the upside and the last buy, and they're going to come down also. That is what we should expect here. Maybe a 161.8 here to the downside. Probably is going to come around this area, but the internal structure of the 5 waves will help you to know where you are going to trust your leg and exit yourself. Otherwise, you'll be trapped. I don't expect this to break this level for now. This that is coming out is not going to break this level for now. This seems like a 5-way structure. Maybe we will be having a zigzag or maybe an 100 extension. If that happens, this is 161.8 to the downside. So once we break here and we are going up again. Price has no business here until we're ready to go up again. So what we may see now is that, are we going to have a zigzag with this? Is this going to be a zigzag? Let's see. The correction here for now is also so little. It's also so little. We may break a bit up to come down. So we need to see if we're going to break a bit up, but will not come to this area. And the upper limit here will direct us to where this is going to be if you're going to come down here. So you must be looking at these things. You can't slip off. You can't slip off. If you are selling, you can't slip off. You have an opportunity to exit yourself maybe around this area, but we still need more structure here to form to finish this B wave. This is an A, and we are seeing a B wave to do a C of B before we go up as 5-way structure to do a C and come down. So that is what we are expecting. It's a long teaching. So I don't think the price is going to break the top for now. We are still within this wave. This is just one wave of the ending structure, wave 2 of the ending structure, and we're going to have a big wave of 3 to the downside to break this thing to the downside. So You want to catch what is going to come up here. Let's plan to catch it. You must also be counting it yourself. Now, let me go to gold. Let me go to gold. For those trading gold, gold can do anything. You must just know that gold can do anything. For those trading gold, don't expect favor from gold. Don't expect favor from gold. If you want to sell gold, it will be wise of you to allow a break of structure to the downside before you sell it. This is highly impulsive. I'm not a soothsayer and I'm not a carrier of bad news. I'm just stating the obvious. Now, we had this shadow correction to the downside, and we thought that this is wave 3, and this is we are finished with 4. Of course, we saw this move as wave 1, very sharp. You know, the correction is so shallow, wave 1, wave 2, and we saw this as wave 3. And if you do a 161.8 extension, is more, it qualifies as wave 3, but they can make it a nest. If they decide to make this wave a nest, then this is going to go highly up. It's going to go highly up. So you must know that. You must know that it's going to go highly up if they're going to make it a nest. But so for now, we are still calling this to be most likely a 4th wave, and we are doing a 5th wave. And that is what we are calling. But at the same time, you cannot just blindly going to say you want to pick the top and begin to sell. You must have a break of structure. This is gold. This is gold. If we bring out the RSI on 1 hour, RSI on 1 hour clearly shows this to be a 3, okay, which is good for you. And if you look at this, it's still a divergence for now. So if you look at a 4-hour time frame, what are we getting? So we are seeing something that looks like a divergence, but we need to also be careful, even though we are seeing something that looks like a divergence. We need to be careful. Now, you can see the high point of 3 here, and this is high point of 3.5, which is still good. So far, we are broken the top. This thing is still down here, and we are broken the top. It looks like, oh, we are doing a wave 5. Except this thing comes up to erase this. Once it clears it off, you should know that don't expect favors. But it still look though as if we are doing wave 5. So you must always be thinking the alternative. What if price will still continue just to go up and not come down? Are we going to get a bigger correction? We are anticipating a bigger correction. So anticipating a bigger correction means, okay, we are expecting at least, because it's bullish, from the black line here, which is the top of 3.5, down to 4 here in the blue, we should get at least 161.8 movement to the upside. Of course, it can be more because it's wave 5 and it's gold. It can be more. For now, we have done a 3-wave structure to downside, A, B, C, and we are done. And this one shocked us anyway. We should have just been in the buy, but we were shocked. We were expecting that probably it's going to come down. But all these are signs that price is coming down to, you know, strong possibility that price is just going to do a wave 5 and give us a more deeper correction to do a wave 2. But considering the news of the war and all of that, we just have to be patient, wait. You don't want to begin to continue to buy at this level, except you've been in a buy from the bottom here. All you can do is to allow structure to form and put your stop loss behind the structure. Like this, like a structure formed down, you lift it up and create another structure. Your stop loss comes here, another structure, your stop loss around this area. And this is a very bullish run. I don't expect that price is going to come and make nothing of here. So higher low we're going to be getting. So this will be the next place you can put your stop loss, or here if you are buying and as you are allowing this to unfold. But in terms of, okay, are we getting to the end of this? If this is a wave 1 and this is wave 2, a 161.8 is here. Price at least should touch this area before we begin to think, okay, what next? Price should touch that area. price should touch that area. And if you are doing a 161.8 from this blue here, it should get here at least a 161.8. But 161.8 extension from 1 to 2 should get to this point. We are seeing price in this place, and then a 38.4 retracement that we didn't get to will get us to this black. And this is a 50% retracement to this point. So a 50% retracement will get us to this point. So having said that, this is 2036. Price may go all the way, break all of this. It may go all the way, break all of this. But what we have to see first is we have to see how we navigate and get a reaction of this third wave. And if we get a third wave, we want to see if we get a fourth wave and finish the last wave to the upside. If you're able to get a fourth wave reaction to the downside, you must look for a third wave reaction to the downside from here. A fourth wave reaction of this particular one, 1, 2, 3, fourth wave to the downside. Then after that, we are going to do a 5-wave structure of the last 5 waves. And that is when you can now be anticipating, are we going to get a structure break to the downside? So not until you get a structure break to the downside, don't attempt to sell this. Do not attempt to sell it. Do not attempt to sell it until you get a break of structure. On the last leg of the 5th wave, once you get a 3, a 4, a 5, and that 5 is going to run 1, 2, 3, 4, 5. So once you break its own 4 of the last 5, then that is when you can then say, okay, maybe let me just take a small risk. And as you are coming down to break more structure to the downside, this is the structure to break down to the downside to say, okay, now we are going big on ABC correction to the downside. So with that, I've come to the end of this, and this may just well be going up, because if you have a 1, 2, 3 ABC correction, then you are going up. ABC correction, we are going up. So ABC correction like this, ABC correction, we are going up. This is another one here. So like ABC, ABC correction up. So we are going to see if you're going to get ABC correction, which is the 4th wave, more up, but don't sell at the peak. So don't buy at the peak. So that marks the end of today's training. Do have a great week ahead.